Imagine this. It's 2019, and a bold new coffee powerhouse is sweeping across China, turning street corners into caffeine hotspots and shaking up the nation's daily ritual. Blue and white cups are everywhere, and they're not from Starbucks. This is Luckin Coffee, the startup that promised to bring affordable, high-quality coffee to the masses, delivered right to your door in minutes. They were opening stores at a breathtaking pace, sometimes several in a single day. Their slogan was simple but bold: any moment, Luckin Coffee. They weren't just selling coffee. They were selling a vision of speed, convenience, and modern life. And the world was buying it. In just 2 years, they went from a concept to a publicly traded company on the NASDAQ, raising a staggering $864 million from eager investors. They were the David to Starbucks, Goliath. Then it looked like David was winning. But behind this incredible success story, a massive deception was brewing. One that would soon send shockwaves through the global financial markets. So, how did this coffee empire's fairy tale turn into a cautionary tale? The story of the fraud is as audacious as their growth strategy. At the heart of the scheme were the company's top executives, including CEO Jenny Jia Qian and Ku Jianliu. From April 2019 to January 2020, a period when Luckin was supposed to be proving its business model to the world, they were orchestrating a massive fraud. They created a complex web of lies to make it seem like the company was selling far more coffee than it actually was. The numbers were mind-boggling. They fabricated sales to the tune of $300 million. Think about that. That's not just fudging a few numbers. That's inventing a whole river of revenue that never existed. To pull this off, they didn't just type fake numbers into a spreadsheet. They created a whole fake ecosystem. The scheme involved using a network of third-party companies that were secretly controlled by Luckin employees. These companies would place huge, bogus orders for Luckin coffee vouchers. To make these fake transactions look legitimate, funds were funneled through this network of shell companies. Employees were even instructed to create fake customer accounts and simulate purchases. They also inflated their expenses by about $190 million, creating a false impression of a bustling, high-cost, higher-revenue operation. It was a carefully constructed illusion designed to fool auditors, investors, and the entire market into believing Luckin was a runaway success. They were essentially playing a high-stakes game of make-believe with hundreds of millions of dollars of other people's money. The house of cards began to wobble in January 2020. A well-known investment firm, Muddy Waters Research, published an anonymous 89-page report that was explosive. The report wasn't just speculation. It was backed by what they claimed was extensive, undercover research. They had mobilized an army of people to conduct on-the-ground surveillance. For thousands of hours, they staked out Luckin stores, counting customers, tracking orders, and collecting receipts. Their findings were damning. The report alleged that the number of items sold per store was drastically inflated. They had the receipts or lack thereof to prove it. At first, Luckin vehemently denied everything. They called the report malicious, false, and misleading. For a couple of months, it was a standoff. The company's word against an anonymous report. Who would you believe? The fast-growing tech unicorn or the shadowy short seller? But the truth has a way of coming out. In early April 2020, the bombshell dropped. Luckin Coffee itself announced that an internal investigation had uncovered the massive fraud. The company admitted that its chief operating officer Jian Liu and several others had fabricated sales. The admission sent its stock into a freefall. Trading was halted multiple times as the price plummeted by over 80% in a single day. The dream was over. The fallout was swift and severe. The U.S. Securities and Exchange Commission, the SEC, came down hard. They charged Luckin with defrauding investors by materially misstating its revenue, expenses, and net operating loss. Luckin, without admitting or denying the allegations, agreed to pay a hefty $180 million penalty to settle the charges. The Nasdaq, which had welcomed Luckin with open arms just a year earlier, delisted the company. The executives involved were fired, and the company was forced into restructuring. It was a spectacular fall from grace, a public humiliation for a brand that had once been the pride of China's startup scene. So, where does that leave Luckin today? Many thought the scandal would be a death sentence. And for most companies, it would have been. But Luckin's story didn't end there. After the delisting and the fines, they went into survival mode. They closed underperforming stores, renegotiated with creditors, and completely overhauled their management team. They shifted their strategy away from reckless expansion and focused on operational efficiency and profitability. Instead of just chasing customer numbers with deep discounts, they began to focus on building a more sustainable business. They introduced new products, like their now famous coconut latte, which became a viral sensation. They leveraged their existing app and digital infrastructure to create a more loyal customer base. It's a strategy that seems to be working. Against all odds, Luckin Coffee has staged one of the most surprising comebacks in corporate history. They have restructured their debt, resolved their legal troubles in the US, and have actually started turning a profit. In fact, by some measures, they now have more stores in China than Starbucks. The scandal served as a brutal, but perhaps necessary, wake-up call. It forced the company to abandon its unsustainable growth at all costs mentality and build a real business. The Luckin saga is more than just a story about coffee. It's a powerful lesson about the dangers of hype, the importance of integrity, and the possibility of redemption. It shows how quickly a celebrated success can unravel when its foundations are built on lies. But it also shows that even after a catastrophic failure, it's possible to rebuild, rebrand, and brew a new chapter. It's a complex legacy of ambition, fraud, and a truly remarkable second act. Thanks for watching. If you found this story as fascinating as I did, make sure to like, subscribe, and hit that notification bell for more deep dives into the biggest stories in business and finance. See you next time.